Welcome to the Deep Dive, your shortcut to getting really well informed on topics that matter. Today we're digging into a brand that's, well, probably in your home right now, Every Industries India Limited. The big question is, can a company that's over a century old, so deeply part of Indian households truly innovate and thrive in today's market? Our mission today is to try and figure that out. We're taking a close look at Eveready's latest numbers, their Q1 FY26 results, and some pretty significant corporate stuff that happened around August 5th, 2025. We've got all this from their own investor presentations, their board meeting notes, and the AGM proceedings. So this isn't just about crunching numbers. It's about understanding how this legacy company, going back to 1905, is still fighting for relevance, for growth as a huge player in batteries and, well, other areas too.
Okay, let's unpack their financial health for Q1 FY26. So their reported revenue from operations hit INR 374.1 crore. That shows pretty solid growth, 7.1% year on year.
Right. And their operating EBITDA, that's, a key measure of how efficiently they're running things, profit before all the deductions that also saw a healthy jump.
Yeah, up to INR 53.7 crore, which is 7.7% higher than last year.
And the operating EBITDA margin, it basically held steady at 14.3%, pretty close to last year's 14.2%.
Okay, but then the net profit, the profit after tax, or PT, that only grew, 2.8% year on year? It reached INR 30.2 crore. Now, at first glance, that PT growth looks, well, kind of low compared to the other figures, doesn't it? What's the story there?
That's a really crucial observation. And yeah, that's where you need to look a bit closer. While 2.8% seems modest, you're right. But if we take out a specific one-off item, an exceptional item, their PT growth actually jumps significantly. It goes up to around 22.7%. So that tells you the underlying operational performance is actually much stronger than that headline number might suggest.
Right, okay, so this exceptional item that hit the PT was INR 7.1 crore. What exactly was that payment for?
Yeah, it was just essentially for one-time bonus payments. They call them ex gratia payments. These went to workmen who separated from the company, so it's a non-recurring cost, something that just hit their profits temporarily this quarter.
I see.
And it's also worth noting, they did report volume growth across their key categories. And their A&P advertising and promotion spending was about 8.6% of revenue. So they're still investing in their brands.
Okay, so those are the main headlines. But where exactly is this growth coming from? Let's break down how the different product segments performed.
Sure. Well, the battery segment is definitely the powerhouse here. It brought in INR 238.3 crore in revenue. That's a big chunk, like 62% of the company's total sales.
Wow, yeah.
And it showed strong growth too, 9.8% year on year. But what's really insightful, I think, is what's happening within the battery segment. Carbon zinc grew, sure, but it's the alkaline battery part that's really shaping things. It outperformed significantly.
Outperformed how? I see here alkaline batteries specifically saw a massive 58% growth in Q1 FY26, and similar growth in volumes too. What on earth caused such a huge jump? Was it like heavy marketing or new products or?
It's probably a mix of things, targeted marketing definitely, but also consumers shifting towards those higher performance options. And their market share for alkaline batteries, that also grew by 50 basis points quarter on quarter.
So 0.5%.
Exactly, reaching 15.3% in June 2025. That's a pretty big jump from 9.6% back in June 2024. And looking ahead, they've got that new Jammu alkaline plant coming online, expected by the end of FY26. That should boost their capacity quite a bit.
That sounds like a significant investment for future growth. And just to put it in perspective for everyone, Eveready's overall market share in all dry cell batteries was 53% in Q1 FY26. And they sell, what, over 1.3 billion batteries a year? That's huge.
It is. But, despite that strong alkaline growth, if you look at their portfolio split now, it's still mostly carbon zinc, about 87%. Alkaline is around 9%. Then you have rechargeable and coin at 3%, and accessories making up the last 1%.
Right.
So the company's strategy is clearly deliberately trying to push that shift towards the higher performance alkaline range and also innovate in related product areas, which is absolutely critical, I think, for a legacy company like this. They need to avoid just becoming a commodity player.
Makes sense. Okay, moving on to flashlights. This segment brought in INR 67.5 crore, about 18% of the total revenue, and it showed really strong growth, 12.8% year on year. What's driving that in flashlights?
Well, it seems pretty clear that rechargeable flashlights are a key driver here. They clocked really strong growth, 39%. So they're definitely adapting to people wanting reusable options, which is smart.
And it looks like they're getting good traction in modern stores and online sales channels too.
Yes, exactly. And they also mentioned an upcoming BIS mandate, the Bureau of Indian Standards. They seem to think this will help create a more a level playing field.
How so?
Well, enforcing quality and safety standards tends to benefit established players like Eveready. It can push out some of the lower quality, maybe unorganized competition.
Interesting. And they sell over 18 million flashlights a year, with rechargeables now making up 38% of that flashlight revenue. Quite a shift. Okay, now the lighting segment. This tells a different story, doesn't it? Revenue was INR 77.9 crore, so 20% of the top line, but it actually shrank by 4.4% year on year. That's quite a contrast to the other
It
segment.
is, yeah. But interestingly, despite that drop in value, the company said performance was resilient with encouraging volume growth.
So they sold more lights but made less money on them.
Pretty much. It really highlights the brutal reality of the Indian LED market right now. Intense price competition is just eating into their margins. It kind of begs the question, can this segment really drive profit without a major change?
So what's their plan then to tackle this price erosion? It seems they're focusing more strategically on professional lighting while also pushing related products.
That's exactly it. And this raises an important point about their long-term vision here. The company is actually targeting ambitious growth, like 3x revenue growth for this lighting segment,
3 times how?
by focusing on premium products, strategic, premiumization, and diversifying their product range. Basically, trying to move away from just competing on price at the low end. They currently sell over 34 million LED lights a year, so aiming for 3x growth by moving up the value chain. It's a big ambition.
Right. So beyond just the segment numbers, Eveready isn't just, reacting. They seem to have a clear game plan. They talk about these 3 core pillars: accelerate, collaborate, and innovate. Accelerate seems to be about building that premium portfolio, helped by a new greenfield facility. Collaborate is about shaking up their distribution, making it more efficient and profitable. And innovate, well, that's about driving innovation across categories, using their dedicated R&D facility, which is government approved.
Yeah, and stepping back for a second, if you connect these strategies to the broader sort of business environment factors they mention, it makes sense. They're seeing gradual recovery signs in rural areas, inflation seems moderate, the monsoon outlook is positive.
Right.
And importantly, they say they're fully aligned now with quick commerce and modern retail channels. So if you put it all together, these indicators suggest, a reasonably supportive environment for these strategic pillars to actually work, kind of like having the wind at their back for these plans.
Okay, shifting gears slightly. Beyond the Q1 financials, there were some important corporate things happening around the same time. Their 90th annual general meeting, the AGM, for instance. That was held virtually on Tuesday, August 5th, 2025. And apparently, all the resolutions they proposed got approved by the shareholders through e-voting.
Right. And some of the key things approved there included adopting the financial statements for the last financial year, ending March 31st, 2025. Importantly, for shareholders, they declared a dividend, ours 1.50 per share for that year.
30% payout.
Exactly. Then there was the reappointment of directors, including the chairman, Dr. Anand Chan Burman. There was even a special resolution about him continuing after he turned 75 in 2027. So clearly a focus on leadership continuity.
Interesting.
And they also approved the pay for a non-executive director, Mr. Arjun Lamba, and appointed and approved pay for various auditors, statutory, secretarial, cost auditors for the coming years, basically shoring up their governance structure.
And the managing director, Suvamoy Saha, he also spoke to the members about the company's performance last year and the strategic plans, and took questions too.
Okay, now let's touch on something else that sounds pretty critical, something that impacts their financial and operational flexibility, a hurdle they seem to have just cleared.
Yes, this is a really crucial development, actually. The company settled an arbitration case with a firm called Real Touch Finance Limited. That was on July 25th, 2025. Every paid INR 15 crore just a few days later, on July 28th. And as part of that deal, Eveready assigned over some old loan receivables and recoverables. But these had a carrying value of NIL.
Meaning they'd already written them off.
Exactly. They were already fully provided for or written off back in FY 2021, so no new hit there. But so what here is huge. This settlement was absolutely key to getting a restraint order against the company lifted.
So it frees them up. Completely. It restores their operational and financial flexibility. Think of it like untying their hands. Now they can fully invest and execute their plans without that legal issue hanging over them. The actual financial transactions related to this will be recorded once they get the final legal award document.
Got it. And while we're on legal matters, there's still that other thing, right? The Competition Commission of India, the CCI penalty from 2018, that was quite large. around INR 171.55 crores. Just for context, the CCI is India's main antitrust body, making sure companies compete fairly. What's the latest on that big penalty?
Right. So to clarify where that stands, they've appealed it to the NCLA. That's the National Company Law Appellate Tribunal, basically the appeals court for these kinds of cases. The NCLA granted them a stay on the penalty, but they had to deposit 10% first, which they've done.
Okay, so it's on hold for now.
Pretty much. The company says they've got legal advice that because the outcome is so uncertain, they can't reliably estimate what the final penalty might be. So for accounting purposes, they haven't made a provision for it in their financials yet. It's still an ongoing legal fight, but the immediate financial pressure is off because of that stay.
Okay, and that pretty much wraps up our deep dive into Eveready Industries India Limited for today. So to quickly recap, we've seen steady underlying financial growth in Q1 FY26,
Yeah.
especially driven by batteries and flashlights. That really impressive alkaline growth shows they're successfully pivoting towards higher value stuff, even while their lighting segment is, struggling with intense price pressure. We also looked at their strategy, accelerate, collaborate, innovate, and saw how the current market environment seems pretty supportive for those plans.
Yeah, and I think what this ultimately shows is that these recent corporate updates, especially getting that arbitration settled, are really pivotal. It solidifies their financial and operational foundation. It really sets the stage for those future growth plans, like the new alkaline plant and trying to make the lighting segment more premium. It basically clears the path for them to focus on executing that long-term vision.
So what does all this mean for you, maybe watching this company or even just using their products? You might consider how a company with such a long history keeps adapting its main business, how it handles these complex legal challenges, and still sets these ambitious targets for the future. What could that tell us about, well, resilience and strategic change in a really dynamic market like India?
It's definitely a fascinating look at how a very familiar name is trying to reinvent itself. Something to think about until our next deep dive.